Welcome to the Buy Box Bandits podcast.
Welcome back to the Buy Box Bandits podcast. Today we have another fantastic guest with us, DILLON Carter, who's the founder of both ORA, the Repricer, and Vendrive, the Wholesale CRM. So DILLON, thanks for being with us. This one we're very excited for. We're all former listeners of Wholesale Made Easy. So
that's really cool. Well, guys, I appreciate you having me on. I apologize for not having released any new episodes lately, but I appreciate you giving it some downloads, man. That's awesome.
Yeah, fantastic. And so in terms of just getting kind of a sense of your background and all that, give us some background, how you got started with Amazon, making money online, eventually software and all that. And then we'll hit the ground running from there.
Yeah, for sure. God, that's a winding road. So background, at a young age, diagnosed with learning disabilities, and was pretty much told I'm not going to go anywhere in life, and just believe that because, I mean, when you're like 11 or 12, you don't really know to challenge anything. Eventually found books, which, being forced to read for, classes I never really cared to because the subject matter itself was not very interesting, until eventually I found business books and just started reading like crazy. I literally have stacks upon stacks over here now. Was fortunate enough to where my stepfather, who came into my life at 11 or 12 years old, had run his own business. And he was the only example I knew of somebody who owned a business. Like, I had to wrap my mind around the fact that he did this, right? But so I had this example, which was really cool. But I struggled for a handful of years. After graduating high school, I did not know what I wanted to do. I tried a bunch of different things, and really was not sure if I wanted to go to college. I mean, I really just did not have a path. And so eventually, at this point, I'm working out quite heavily. One of the trainers was like, "Hey, you should become a personal trainer." It's like, yeah, why not? So go become a nationally certified personal trainer. Do that pretty quickly. Did that for a while and started playing around with things that were more scalable. I became obsessed with this idea of scalability, right? And I think most business owners should, to a degree, depending on like what you're trying to build and what you're optimizing for. So for me, I was in a position where I was trading my time for money, which is like not ideal, but it's a good entry point. And so I started looking for other things that were more scalable. And for whatever reason, I was obsessed with the physical products thing, right? Like, oh, I could make sales while I'm sleeping. Heard about the Selling Family on a podcast. I think it was Pat Flynn's podcast, actually. And I was like, cool, retail arbitrage, that's a thing. Let's go try it out, right? So on the weekends, when I was not training clients, I would go to Targets and Walmarts and try to buy stuff. And like most of us, like there's this interesting, clear trajectory that all of us go through, right? It's like, you hear about it, you're like, oh, that's kind of cool, but like, there's no way, right? You create a seller account, you buy a few things, you flip it, you're like, oh, I made money. Okay, this is real. Then you start to treat it a little bit more seriously. And so I started spending as much time as I could in Targets and Walmarts, flipping things, doing RA, and hit a pretty interesting fork in the road. One of the first ones in my life, at least thus far. I'm sure I'll have many more, where I did not see eye to eye with my GM at the gym for marketing things that we were doing. And so it came down to, I got to leave. And I had clients that were like, hey, wherever you go, we'll follow you. So I could have gone to a new gym. I could have bought a gym, opened a gym, done at-home training, all these things, right? Like I had all these opportunities, but I realized it's not really what I wanted. Loved my clients, loved helping people, but I really wanted to build like an actual business that existed outside of myself. And that's when I really hit the ground running on RA. I spent every single day doing this. At the time, unfortunately, I was in a very toxic relationship, which I do not recommend, but became an important catalyst for me. I got to a point where it was just hard. I mean, just trying to figure it out and spending countless hour after hour figuring things out and trying to flip things. And I just got to a point where I sat down. I was like, I don't like where my life is going. I need to make major changes here. And that was relationships. That was me enrolling and going to college full time, even though I'm like 23, 24 at this time. So I went to university, full-time finance degree, was like, we're doing this, we're changing everything. And then again, I had this problem of scalability with the RA stuff. I started testing OA because I can do that at home. Awesome. But then, there's only so much of that you can do, right? Especially being in classes full time. I mean, I was not doing this online. I was literally on campus going to classes. So I needed something that I could really use my time effectively with. And I hit the next fork in the road that every Amazon seller tends to, I would say, private label or wholesale, right? Private label, fantastic for, a nice multiple on your exit, but it's going to require more cash and a lot more time invested before you can start getting some returns in terms of cash flow. I needed to pay the bills now. So wholesale to me made a ton of sense because I knew I could cash flow it. I knew I wasn't trying to grow something to exit, right? I didn't need to do all this branding. I mean, I started doing that without a business entity. Like when they would ask for my EIN, I give them my social security number. I still have, and actually I've never had like a legit website. So I remember, like, I can go through my personal email right now and pull up all my invoices because it was just coming to me like super, just scrappy figuring it out. And eventually I did, right? Like once I got out of that relationship, I'm in school full time, all this stuff, but I finally had the capacity to understand what I was building and what I was doing and what worked and what didn't work. And so I started to do that super well. Really had a pretty good, smooth process there. And I started reaching out to everybody on Instagram at the time who I knew was doing wholesale at 7 figures on Amazon. I was doing 6 at the time. So I'm doing about $250,000 at this point in revenue, right? So like nothing major, but like I'm paying the bills and school and all that stuff. And the first person to respond was my now co-founder, James, who was like, hey, like, and I'm offering to pay these people money, right? I'm like, hey, I'll give you like a few $100 for your time for an hour. And he's like, don't worry about it. Let's just like jump on a call, whatever. And he happened to read my personal blog, which was cool, right? So he's like, all right, cool. This guy's like obviously into some dorky stuff. This is awesome. And we started meeting up every few weeks, just to, mastermind, hold each other accountable kind of a thing. And he's like, hey, by the way, I'm also in school full time. It's like, oh, cool. What for? And then he goes, comp sci, so computer science. And I'm like, oh, no way. So you're an engineer. That's really awesome. And we started thinking through like, what could we work on together? And at the time he had already been building BinDriveCRM.com, which is the wholesale CRM. It's funny because like when we started to compare our internal processes that we had developed outside of each other, it was pretty much the exact same thing. Right? Like we're using Trello, we're using Excel, we're using Google Sheets, and we basically turned that into an actual standalone software. And so we kind of cut our teeth with that. We kind of launched that together, learned a ton, and then eventually we're like, we need to launch something that is way more impactful, that has a larger audience, right? And that's when we really went to the repricing route. We started thinking through what made sense, what areas did we think could be innovated on, it could be done better, it could be updated, and things that like we were passionate about and wanted to improve upon. And we landed on repricing. And so that's when we launched ORA. And that's when we really just as a company started to grow massively. We've been growing the past 4 or 5 years. So it's pretty nuts. So it's a lot of winding and weaving for sure. And somehow we ended up where we're at now.
What year was that when you left the gym world to go full-time RA?
It's a good question.
Just trying to get a sense of how long it's been.
Yeah. First, no, that's a good question. So we've been running the software company for about 5-ish years right now, as of today, I would say. And then I ran the wholesale business for about 2. So whatever that math comes out to be.
2014 or something like that.
Yeah, that sounds about right. Yeah, but 2014 sounds like forever ago. But I mean, in my mind, it kind of is because so much has changed, But yeah, so I mean, it's crazy, right? I mean, the industry, the Amazon world has changed dramatically since I was like hyperactive in it. Mm-hmm. But a lot of things also have not changed, right? You guys were talking about the Wholesale Made Easy podcast that I ran for a while and started everything. And the reason actually why I stopped making episodes was I'm like, well, I wanted to cover foundational things, not trends, not like, here's how to get an account today in 2022. Like I'm kind of over those things, I'm like, what works, right? Like what's the business aspect of this? What's the evergreen content and things that we should be sharing and talking about that no matter what kind of trends and fads change, it's irrelevant, right? That content's still applicable because at the end of the day, we're talking about an industry that, yes, the Amazon world is moving at a fast pace, but when you're doing wholesale and you're working directly with brands, that industry is not moving incredibly fast. It's actually very antiquated. And so, it's really taking a step back and understanding what 2 industries are you overlapping in and how does each one of those work? And then how can you use that to your advantage?
So getting into more of like the technical aspect of building up this wholesale business, because a lot of our listeners are in the OA space with goals and visions of getting into wholesale, right?
Sure.
So obviously your podcast covers a lot of this, but give us the overview, the 3 to 5 minute overview of first account, second account, third account, like how do we approach that?
Yeah, great questions. So let's set some expectations, right? Because I love getting these types of questions of, I'm trying to do X. So like I was talking with a friend last night at dinner actually about this of, people will quit their jobs, send me a Facebook message and be like, hey, I quit my job. I have no business experience. And in the next 30 days, I want to do 6 figures with wholesale on Amazon. What do I do? I'm like, go get another job. Like, listen, and I'm not saying like, don't start this business, but you got to understand the expectations, right? Like, you can't treat this as a hobby. This is a real business. Wholesale is very different to transition to for OA RA sellers because OA RA is very transactional. Wholesale is relationship based, meaning we're on the phone, meaning we're doing sales. So the skill set is vastly different, right? We're not just analyzing data with a Chrome extension at this point. Now we're really trying to understand, how do I convince somebody who may dislike me simply because I mentioned the term Amazon to not only approve me, but enjoy working with me, and how can I deepen that relationship over time? So for expectations, what I typically recommend is you got to commit at least to a year, right? Like, I don't care what business you're starting, commit at least 1 year to it, because you need enough time to figure out what works and what doesn't work, right? Number 2, sales is incredibly important here. A lot of people don't like sales, including myself. Like, just not my, I'm actually very, I'm not an extroverted person. I'm actually very introverted, but I can be extroverted when I need to, right? So it's draining for me and it's very difficult, but it's a skill set that's well worth building. So if you're uncomfortable with it, you're doing cold calling at the end of the day. You got to understand that you're going to hear a lot of no's, right? So you're going to hit a lot of roadblocks. I always recommend committing to calling 10 brands, expecting nothing but feedback. Just understand the fact that like your assumptions of how the conversation is going to go are completely different. We tend to over formalize the conversation. It's 2 people having a casual conversation at the end of the day. Once you understand that, you approach it differently. Number 2, there's this big fear of, well, what if they ask me X and I don't know? That will always happen, and it will consistently happen time and time again because it's a new conversation. You have to get comfortable in understanding how to respond to these things in a healthy way and how to use it to your advantage. I'll give you a good example. If somebody goes, hey, actually, let me try to think of a good example. I thought I had one ready. I don't. So let's say
that
they go,
plays to the exact point you just made. Yeah.
You gotta be ready, right? So let's just say they ask you a tough question, right? Let's just roll with it. And you're like, I have no freaking idea what the heck they're asking me. You don't even know the term that they use, right? Understanding that the fact that you can say, actually, that's a good question. I'm not sure. Let me look into that and get back to you though. And then just be able to move on in the conversation and then control that conversation. But here's the interesting bit. You use this to your advantage by having a notepad, writing down the question. When you're done with the call, you go find the answer, you write it down. The next call, you get that same question. Guess what? You got the answer ready to go. They think you've known it the entire time. So you got to be a little bit more strategic here, right? RA, OA is very transactional. Buy it, flip it, it's profitable. Wholesale is completely different. The game itself is different. What you're optimizing for is different. With RA, OA, because you're going so shallow most of the time in your SKUs, you need a wide breadth of SKUs. With wholesale, that's not necessarily the case, right? You might get one SKU with one brand. And this brand, by the way, might have 500 SKUs, but only one of them is truly profitable for you. But that one SKU can sell thousands of units in a week. I had one brand, this was during Q4 naturally, but I had 1,000 units. They were getting checked in increments of 100. I would refresh. The moment they would get checked in, they would be sold out. So you got to think through the business differently here, right? I'm not trying to say it's profitable, buy it. I'm trying to think through, okay, what's the best deployment of my capital now? Because here's the interesting bit with RAOA, the limiting factor is not typically capital, it's your time. With wholesale, that's less the case. Once you understand how to get accounts, it actually becomes, how do I best manipulate my purchasing to get the highest average ROI on my capital expenditure, right? So again, you're thinking about it differently here. So in terms of how are you getting that first account, you're stumbling into it. Like there's no easy way around it. There is, right? Because there's so much to learn. There's so much to figure out. And I'm telling you right now, like you're going to get that first one, you're going to get approved and be like, there's no, I just fouled up that entire call. How the hell did they actually approve me? It happens, right? But you start to figure out what to say, what not to say, right? This is why I wrote so many blog posts. They're still up on bindrivecrm.com/blog going into these objections, because you realize there's a pattern. right? When you're talking to the same type of person in the same industry, they're going to ask you similar questions and they're going to have similar concerns. And you need to understand how to immediately, relate to those concerns and kind of overcome those. This is what I learned being a personal trainer. I would sit down at 19, 20 with a 30, 40-year-old. They'd be like, hey, I need to work with you for the next 3 months after what I just saw. And it's going to be $3,000 due today upfront. I know they're going to have a few different objections. Hey, I need to talk to my wife. I need to talk to my husband first. Okay, what do I do in those situations? Or I'm not really sure if I want to do that upfront. Can I split it? How do I respond to that one? Right? We have all these things, but nobody can give you that playbook straight up, right? Like I try to do that with the blog posts, but you're still going to get hit with things that are just like crazy outlandish. You just got to get good at thinking on your feet and how to talk with people. So that first one, you get lucky with it. It's awesome. And I'll tell you right now, that first one you get approved for is probably not even going to be profitable. I stopped getting excited when I got approved. I started getting excited when I placed the order, right? So you're trying to like build the game, so to speak, to work in your favor. You're starting to understand like when should I get excited versus when I shouldn't get excited, because wholesale is built in. It's tough because it's sales related, that you're going to have a lot of quote unquote failures and just tough times and struggles and hurdles to overcome that. You don't want to falsely get excited, have that not be true, and then be like, this doesn't work. No, it's just you're getting slapped in the face with reality right now, and that's okay, right? So here's the thing. Getting that first one is incredibly difficult. Getting that second one, a little bit less so, that third, fourth, fifth, right? It just becomes a cycle. And then what's nice, man, like when you do things like track your open rates, your profitability rates, all these things, then it just becomes a math game, right? Then okay, well, if on average I want to add 1 new profitable product or SKU per week, making that conversion rate back out, I need to call 10 suppliers per day. Great, do that all day long, you're good. Right. And then it just becomes how big do you want to become? And then like how much capital do you have? So on and so forth.
Yeah, absolutely. And for sake of example, you having lots of experience with this stuff and talking to a lot of people, can you break down the typical math in terms of calls made, accounts created, accounts that end up being profitable, that kind of stuff? If there is a formula, which I'm pretty sure you did an episode on. So I think.
Yeah. Yeah. And granted, I can't speak to everybody here, right? So we're talking about a small sample size right now. But what I tend to see with doing phone calls was a 10 to 20% open rate for the account, right? So for every 10 suppliers I'm going to call, I'm probably going to open 1 to 2 accounts. However, the next conversion is how many are profitable enough to have at least 1 SKU for me to purchase. That's super important too, right? Just because we're opening accounts doesn't really translate to revenue. That also tends to be 10%, right? So that's what I'm saying. Like you can't get super excited here just because you open the account. It's not necessarily profitable. So based on that, what I tend to recommend people to do in terms of like, I'm getting started, how do I spend my time? Contact 10 brands per day. If you're contacting 10 brands per day, like real conversation, that just like I called and they didn't pick up, but you actually had a conversation, whether they said yes or no. If you're doing that consistently, you're hitting a good trajectory where you're getting enough feedback in terms of what to say, how to overcome certain objections. But also once you get good at it, you're at a point where you might be able to open 30 to 40%, where eventually I kind of got to, right? That's towards the latter half where I just really got comfortable with it. And this is just basic sales, right? You get started, you have no idea what you're doing. It's not great, but then eventually you kind of hone your skill set and it becomes a little bit better. So that's important. So those are the 2 that I tend to see, right? So if you're getting started, I would expect, 1 to 2 opens out of every 10 you contact. And then out of 10 accounts you open, you're probably going to have 1 to 2 that are actually profitable. Can that change? Absolutely, right? I mean, you could be coming in this with a ton of sales experience and just know what the heck you're doing better than I do. And you're just like, dude, 60%, it's all good. Or it might be worse, but that's okay, right? I've talked to people where they're like, I've tracked it and it's less than 10%. I'm like, okay, we need to figure out why. Either the types of brands you're contacting or sourcing are terrible, or you're just completely destroying this conversation and you need to hone that skill set a little bit further.
I think you really hit the nail on the head explaining the difference between OA and RA. And I haven't heard someone explain it like this, but it's very true. Like OA and RA is just numbers. You're not talking to whoever at Walgreens trying to get discounts. But with wholesale, you're like, you really have to sell yourself and sell your company to the sales rep. And a lot for me, part of that was because those are pretty much the metrics that I work with. It's out the gate. The profitability is like, could be like 10 out of 100 accounts that are opened. But I've been learning to go back and renegotiate with sales reps and kind of like reassert myself back into these conversations after I'm more experienced. And then that's how I've been able to get better discounts now. If you want to talk about a little bit of that, trying to go back into non-profitable accounts and trying to make them profitable.
Yeah, no, that's a good point. So this is why the relationship is so fundamental, right? If you have not built good rapport, they're not going to tell you anything. I worked with one brand and I was working with a sales rep. And one thing I want to highlight, if you're talking with the founder of a company, that conversation is completely different than with a sales rep. Sales reps are hearing 10% of every number you're throwing out, right? So the way I'm going to open that conversation is different. But my point is, I had really built a good relationship with this rep over the phone, right? I'm getting her to laugh, like we're getting to know each other, all these things where I'm like, she likes Dillon as a person, first and foremost. For me, that's goal number one. I need them to like me, because if they don't like me, they're not willing to do anything for me, right? This is reciprocity rule, right? If I can make you laugh, now you're like, okay, Dillon's a pretty decent dude. I'm willing to kind of hear him out on some stuff. Here's where a lot of sellers get wrong. They don't build a rapport. Goal number one, open the account, hardcore negotiate. You haven't given them a dime and you're trying to get an extra 50% discount. They're like, dude, what the heck? Like, you're coming at me with the right hook and nothing? Like, what the heck? So once you've built a good relationship, and again, these things take time, they will tell you things. I literally had this sales rep be like, hey, I know being on Amazon, it's a little tougher because fees. If you sign up for this association, it's like $90 a year. We have a deal with them where we'll give you an additional 10% discount simply because you're a member. Just give me your member ID number. She didn't have to tell me that, but she did because we built a good relationship, right? And I'm not saying like, hey, I need this from you. I'm saying, hey, what can I do for you guys to make this worth it, right? So when I'm going into a negotiation for fees, or I'm sorry, like discounts, I'm not saying this is what I need. I'm saying, hey, what would I need to do for you to make it worth an additional 10% discount? They'll tell you, right? It doesn't need to be this, offensive, defensive thing. It's collaborative, which is so interesting, right? It doesn't feel like you're trying to win somebody over or convince them. It's just a conversation. And yeah, I think being able to go back and do those things are incredibly important, but you should also be looking into the future. There were a few brands that I worked with where I knew that starting out, they were not going to be super profitable per unit, but the volume was insane. And I knew what I could do for them, even using PPC with wholesale, which I've recommended time and time again, where it makes sense, right? It's always worth testing, not always profitable. But I knew that I was not going to be as profitable hitting my buying criteria as I wanted to be, but I knew that in 2-3 months I would be. So I was willing to kind of take a lower ROI, knowing that I could use that cash flow as leverage with that brand. So I could say, hey, we've been working together. I've been super low touch, exactly what I told you I would be. I haven't hardcore negotiated you yet. I've given you 30 grand so far in sales. We're pretty consistent. Here's what I've been doing, where I've been testing PPC ads, blah, 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 cleaning up listing. What I think would really help me be at a point where I could really grow the volume is getting it a little bit more margin to work with. If I have a little bit more margin, it may make PPC actually profitable for me to run, which naturally increases the volume, right? We're just thinking through, how do I make this a win-win? So even when I'm in these conversations, I'm like, hey, what's your goal for 2022? Let them tell you, and then you see how you can fit in there, right? And I think this is something I haven't learned until recently, like explicitly, but it is collaborative. It's a conversation. Sales is not, I'm trying to, beat you, and then eventually you're just like worn out, and I'm like, haha, I win. No. You should both be leaving that conversation like, wow, this is a good situation. Let's maximize this together and let's make this work.
Absolutely.
What sort of margin is reasonable to expect in that beginning, in the first couple of accounts? Should we be expecting a 30-40% ROI, or is it too high and sort of like a 15-20% ROI?
It depends. You're going to see all of it. It depends on what you're willing to purchase. So I've always said you should have your own buying criteria of what you're willing to accept and what you're not. If you're in a position where you have a ton of cash and it's just sitting around, take lower ROI, right? Just because, like, would you rather have cash making nothing or making 5%? Probably 5%, right? Assuming it's liquid and moving inventory pretty quickly, it's fine. But eventually you get to a point where the problem is not it's not that you have so little inventory to purchase, is that you have too much, and now you're starting to switch out your lower ROIs for new higher ROIs, right? That's where you get to this like portfolio approach of, I'm not going to go raise capital, so I only have like the capital I'm reinvesting and I've already started with. So now I'm going to try to raise my average ROI or margin, however you're looking at it as, from let's say 20 to 25%, because you just know that incremental change compounded over the months is going to be pretty nice. So it really depends, right? I mean, for me, my buying criteria was 30% gross ROI. I tend to look at ROI instead of margin. That's just the way my brain thinks as a finance major. Like margin, I'm like, I don't care. Sorry. I know it's like the traditional way of viewing it, but I just don't care. It's an investment for me. So 30% minimum ROI, $4 net profit per unit. That $4, why I have that in addition to the ROI is so that I have enough dollar amount room to begin testing PPC ads, right? You could have a 60% ROI, but if the price point's so low and it costs you $2 per click, you're probably not going to be able to utilize it at all. So I'm trying to find ways, basically what you're trying to do, right? You have this whole scope of products you could purchase, and you're really thinking through how do you want to approach the business, and then you're trying to pinpoint products that fit that mold. So there's a lot of things that were profitable technically that I gave up on because it didn't really fit what I was trying to do, right? And just to add on to my buying criteria, it's also 30 units organic per month. If I can't move at least 30 units per month without changing anything, I don't care, right? And this kind of comes into the perspective of newer sellers, right? Where, and I'm sure you guys see this all the time in the communities, they post a 600% ROI sale. They're like, oh my God, look at this. And everyone's like, oh my God, that's insane. And I'm like, how many units? One? I'm not going to build a business off of moving one unit. Can you do it 30 times, 100 times, 500, right? It's not just the profitability, it's the volume relative to your profitability, right? This is like economics 101, right? So I'm trying to make sure that I'm building in mechanisms to ensure that I don't make stupid decisions, like saying, oh, it's super profitable, but I can move 2 units a month. Wow, great. I can't wait to purchase 50 units of those, right? Like it doesn't matter. Or if it's super, high volume, but I'm going to make 30 cents per unit and it doesn't hit my, my $4 minimum or my ROI. I'm like, I just don't care. But every business owner is different. I've talked with sellers who will take 2% all day long because they only want low ROI, but super high volume things. And they have their own warehouse, right? So they're working on a fixed cost operation versus a variable, which is what I preferred because it just kind of go deeper into that. With wholesale, there is that cost of prepping, right? It's going to exist. I had a few brands that would ship directly in, but I never expected it. So because of my situation, I went the prep center route, right? It's like, I don't have the time. I don't want to build a team. I don't want a warehouse. And being a newer business, you tend to want to be on the variable route up until that variable total cost within a period of time goes past the fixed cost. And then now it's technically cheaper to go fixed, right? So it depends on where you're at, right? Like there's so many variables that change. This is why when people are like, I love when the quote unquote gurus get on podcasts and they're like, this is exactly how to do it. I'm like, that's how you did it. There's so many variables, right? Are you coming at this with 20 grand cash? Okay, it's a different conversation than you saying, I got debt and I got a $1,500 limit on my credit card. I'm trying to figure this shit out, right? That's completely different. If you're like, hey, I don't have a whole lot of time, great. You probably don't want a warehouse, right? If you have a ton of time and a ton of cash, it's a completely different thing, right? How big do you want it to be? It depends on what you're optimizing for at the end of the day.
Absolutely. In terms of kind of switching things up on the software side of things. So I know you had definitely one of the biggest, if not the biggest Facebook groups. What other traffic sources, if any, were instrumental in growing the different parts of like Vendrive and Aura?
Yeah, that's a good question. The Facebook group was definitely that.
And how many members? It was in the 5 figures, right? Maybe even multiple. It was a lot. I know that.
Yeah, I think at peak we're at 15,000.
Yeah.
Right now we're probably 13,500. I would say, yeah, probably around there. So it's still relatively big. Yeah, I mean, the thing. So here's the interesting bit, right? A lot of people will have a decently successful Amazon business and then throw you a $2,000 course, which is totally fine, right? Like there's nothing wrong with that. Like I'm not like, talking down about it, but we realized, okay, well, that's one route we could go. But again, I'm thinking scalability and recurring revenue is incredibly important, which is why we went the SaaS model, right? So software as a service. versus, one-off ticket sales, we decided, well, why don't we just give away our knowledge for free, teach these things, and build a business on top of that. And that's essentially what we did, right? So every Tuesday for, 2.5 years.
Live sourcing, baby. I know it. Yep.
Like literally would get home. I did one of these in a conference room on campus one time because I had a study group go late. I'm like, sorry guys, I got to go do a live sourcing thing, and that's what we did. I mean, we just shared everything for free and just taught. And we're just like, hey, why don't we help as many people as we can get to a position where they would want this thing. And then when we launch it, they know us, they trust us, and we've provided so much that like, hey, I'm at least willing to try it. That's all I wanted people to do. And that's what we did. And I was one of the only, and I would say probably still the only founder of a repricing company that has been public about anything. I mean, it just does not occur. It's so crazy to me that, so if you look at the technology space, not in the Amazon world, just tech, most of your founders are publicly facing, meaning that they're sharing information, they're sharing what they've learned to help you succeed as a user, blah, blah, blah. In our space, that does not occur, mostly because our software run businesses are lifestyle-based businesses, right? They get created, you throw a few VAs on it for support, and you move on with your life. That's not exactly what we wanted to do. Like, we never outsourced anything. So for us, we've been a bootstrap, small, lean team, which, has pros and cons, but we realized that we were in the best position to share what works and what doesn't work with repricing. And nobody would talk about this. It was always just like one person in the Facebook group that's like, if you do this one thing, it's terrible. I'm like, but how do you know that? Your sample size is one, it's you. We have thousands upon thousands of users. So we see the trends, we see what works and what doesn't work across the board. And so I just started being on as many podcasts as I could, sharing what we were learning. Be like, hey, regardless of what tool you're using, this works and this doesn't work as well. And just here's what we recommend, here's what we're seeing. And that seemed to help. So we've always led with education. I think that's super important.
Yeah, and no paid acquisition ever?
Not ever. In the past year, we've kind of gone deeper on paid acquisition.
I'd assume it's pretty hard to target unless you were doing just retargeting or like scraped like big, like the list of emails, which I don't even think you can do legally on Facebook or something. But.
Yeah. So there's two types of paid acquisition when you're talking these platforms. There's persona based, which is your Facebook, right? So you're saying this is the type of person I want to target. And then there's intent based, which is like your Google searches, stuff like that, where it's like, by the intent of the user's behavior, you can tell that they fit this mold. So that's kind of what we do. Yeah, it's incredibly hard to target a.
I'm sure. Yeah, I'm about to Google it. I won't click it, but I'll see if you can.
I appreciate it.
Don't click when you guys Google Aura. Do not click the ad. Click the normal search result. Save these boys some money. Okay, you guys are the number 2 result. Do not click the ad. Just click the normal. If it's a company you don't like, click the ad. For other types of Google searches.
Yeah, for sure. It's no, it's cool. I mean, so we've gotten to where we have, and I would say we're relatively big in the space. Not in terms of like employee count. We were like super lean as a team, by the way. Like I'm very impressed with the level of efficiency we built into our team. It's pretty cool. I mean, some of the competitors we go up against have teams of like 30, and we're competing with them. It's nuts. We're like 3 people. So it's really cool. But no, it's a hyper competitive space, but we've been able to grow strictly through what we've shared, education. Affiliates were huge for us, right? So when we first launched, we reached out to a few people that we knew that were in the space, and we're like, hey, I'm not asking you to do anything, but like, give me feedback on what we built. And if you love it, awesome. If you hate it, tell me why. And luckily those people jumped in and were like, this is sick. I also have a group. Can we talk about an affiliate deal? And so we've grown pretty heavily from that perspective, which has been awesome. But up until recently, that's basically been hit. It's been absolutely bonkers. But then recently, we wanted to take on some more channels, and so that we started playing around with the paid acquisition route.
Mm-hmm. Fantastic. Yeah, and the nice thing is, like, with something like your type of tool, like the type of person, like I'd assume they either join it and they quit Amazon after a month, or they're on it for years because they're making money and this is the right tool for them. I would assume. No,
it's so true. This is why we explicitly say when it's a good fit and when it's not. So I'll say it here just now. if you're doing less than $5,000 a month consistently, and by consistently, I mean in the last like 3 to 4 months in revenue and sales, or less than 25 SKUs, it's probably not a good fit for you. At the end of the day, here's the way I approach this. I don't want your money now, right? I want you to build a sustainable business first and foremost and be with us for the next 3 to 5 years that you run this business, not for the next 3 that you're trying to figure it out, or three months, right? So for me, I love having sellers be like, I'm sure you're going to say, just jump in, but like, here's that situation. Like, actually, no, you should wait 6 months. Like, it's really fine. You know, we're not in a position where we're hurting. So for me, yeah, I'm always looking at how do we maximize lifetime value of a customer, right? So that's them being with us for as long as possible. If we're doing that, that number's going up, that's a good sign that we're providing value. So the moment you have people jump in too soon, you see that kind of plummet. So we actively are just like, hey, come back in 3 months. It's totally gonna be fine. Because unfortunately, what ends up happening is, man, you become an Amazon seller and all of a sudden you need $2,000 a month in software. It's like, you don't.
Oh yeah, that's one of the big
don't.
things. Yeah, I made a video about that a few weeks ago.
Good,
Yeah,
good.
like just keep up pretty much when you're new. That's what I say.
Dude, that is it, man. And listen, at certain points, it does make sense to bring on forecasting tools and stuff. But
yeah,
when people do these things too quick, they get a bad taste in their mouth. They're like, oh, repricing doesn't work. It's like, no, you just had $500 in sales. There's nothing I can do for you. Like, you don't have the volume for me to actually provide you an ROI. But eventually that will be the case. And so we like to tell people, wait until it really makes sense and it's solving a problem you already have, because then you're immediately going to see the ROI and it's going to make sense and you're going to stick with us for the next 3 to 5 years.
So when you look at the repricer based, right, there's different price bands, right? Do you consider a product like Seller Snap a direct competitor?
Yes and no, right? I mean, you definitely have, like you would in any market, different segments of the market. So yes, in the sense that they do repricing, but it's definitely different, right? The price points you're talking are vastly different. Yeah, it's a hard one to say yes to because they just approach it so differently.
Is it like the backend technology that's different though?
Yeah, backend's for sure different. Absolutely. I mean, that's always going to be the case no matter what repricing tool you're using, right? That's super important. But it's funny, man. There's probably like 20 different repricing tools, and I find a new one every single day. But there's really only 3 that we consider true competitors that we pay attention to. The rest, we're just like, we get it. We can immediately tell that you're using a bunch of VAs here, and like this is not really going to go anywhere. It's basically like, here's a trend I've noticed. You have sellers that do well, that have some money, and they see the software space and they go $signs, and then they go outsource a dev, build up something, launch it, and have no idea what they're doing. Especially from a technical perspective, people think that just hiring a dev, not an engineer, but a dev, and telling them what to do is enough to build a scalable infrastructure. And it's just not, man. Repricing is so complex and so heavy from an architecture standpoint. It's bonkers. So, I mean, our beta took 80 hours a week, 8 to 9 months with one person. I mean, it's not an easy task to build. Like VinDrive CRM in comparison, vastly simplistic.
Yeah, because that's the type of thing that's not working 24/7, or you know what I mean? It's not like
there's no computation happening.
Yeah,
right? Like we're literally running mathematical equations and say like, what do I do here? Make change, right? Make change, don't make change, all these things, right? I mean, we're doing hundreds of thousands of price changes every single minute. So that level of complexity is incredibly important.
And probably expensive too. In terms of like your long-term goal, like would you, in terms of like, is it to sell the portfolio or just to grow it forever? Like, is this your baby? Or are you not super passionate about it? Just curious, kind of, if you want to share.
Yeah, no, I love that question. Yeah, it's definitely my baby. That's for sure. I feel like half my identity is Aura related. So VinDrive CRM, it's something where it's still existing and we still support it. We're just not adding features onto it because it's just such a small tool. It's $27 a month. Like, hey, jump in. We still have people pay for it and use it daily, but it's not something that we are really focusing on as a small bootstrap lean team. But Aura is a different story. So like right now we're undergoing pretty much a full-on rebuild. We're converting over to the new APIs, the SBA API versus the MWS API. That comes with a lot of upside for us in terms of scalability. So we're in a position where Aura grew incredibly quickly, And it's like we're playing keep up this entire time. So we're finally at a point where, we brought on another engineer that, adds a little bit more capacity. So we're in a position where once this rebuild's done, we have a more scalable architecture and foundation. We're able to add new features, fix bugs, all that good stuff. So no, I mean, the next year for ORA is going to be absolutely bonkers. I mean, we're talking new marketplaces, features, bug fixes, all this good stuff. Things that we've been wanting to work on. We just have not had the capacity to do so until now. So no, it's super exciting, man. In terms of like selling or anything like that, I don't know. It's hard to say. Yeah, there's a handful of different ways. We've been approached multiple times.
Oh, really? Yeah, because I'm sure you saw Tactical Arbitrage sold recently.
Yeah,
yeah, that's pretty
actually,
cool.
Yeah, I was just talking to a buddy who's an insider about that. So,
cool. Amazing.
Yeah, super cool situation there. But yeah, we've been approached multiple. Actually, we got approached last week too. Again, so it's not something that we care to sell now. I mean, it's our livelihood. It's what we do full time, which is awesome. So it's hard to say, man. Personally, I would like to keep it as long as possible and keep adding value. I'm not a fan of just keeping something to keep it around. But as long as we're consistently adding value and growing.
Yeah. And yeah, what are your thoughts on the future of Amazon from a third-party seller perspective? Because it's definitely, now that I've kind of, at least for the short term, committed like my life to this, from like doing the business day to day, all this content and such, like stuff kind of just makes me nervous. But then you see all the aggregators that are buying third-party brands. All right, what do they know that I don't know? They probably know a lot. I'm curious your thoughts on the longevity of that kind of stuff.
Yeah, that's a good question. You're seeing a lot of, and I'm sure there was a podcast episode I did on Wholesale Made Easy like 3 years ago talking about will have roll-ups. I was like, I was literally like, you're going to have roll-ups come into this industry. And what a roll-up is you have a big fund, they raise a ton of money, come in, and then they acquire a specific type of business and then turn that into one massive company and then exit it, right? So here's what happens. You take a small boutique PE, a private equity firm. Boutique just meaning they're small and very specialized. They raise, let's say, $10 million. Your business is, let's say, worth $1 million. When you're looking at multiples on businesses, there's a lot of variables at play, including a size premium. So here's what's interesting. You have PE firms that won't touch a deal that's less than 50 million. So if you can come in with 10 million, buy up 10 businesses that independently are worth 1 million each, but now in aggregate, that $10 million is not worth a 4x multiple. It's now worth a 4.5x multiple. I'm sorry, there's an arbitrage opportunity, right? So all you do, I mean, what these guys do is they come in, they buy $50 million worth of businesses. Now it's worth a higher premium than what they paid for it. And then they go take it to, the 4 PE firms that touch businesses of that size, and they exit it. Or they hold it for a long period of time. We're starting to see, actually, interestingly enough, some long-term holding plays. At least that's what they're saying. We'll see how that actually plays out in reality. But yeah, I mean, you're going to see that. It's interesting. We're starting to see that in the software space. I would not have guessed that as quickly because it's a very small space in terms of tech. For the product-related brands, it makes a ton of sense personally. I mean, I've told people, like, there's 2 major opportunities I see, which is go buy a old school traditional products brand that's not online at all, take it online, increase sales dramatically, or do the inverse, right? Go buy a Amazon only brand, but it's a real brand. That's the
Ty Lopez model. That's seriously though. Yeah.
Yeah. I mean, right. Like there's nothing here, right? There's no secret sauce. It's just, this has been existing forever. It's just finally come to our industry, right? And this brings up an interesting point. I've always said, like, every Amazon seller should be reading content outside of Amazon. The Amazon world is such a small niche thing that you're missing the bigger picture here. And once I realized that, I was like, oh, okay. So all these, I have run a successful business, but you've really only been running a successful business for 2 years in one industry, right? Like, you haven't done it multiple times. Listen, kudos to you. You've pulled something off. That's fantastic, but you're not in a position to really have an opinion yet in terms of like the greater scheme of business, right? Because go jump into a new industry and realize how different it is, right? And this is why I keep saying you need to understand these fundamental things, right? What's the skill set of just business? Making the pivot from Amazon to software dude, it's completely different. Like, everything about it's different. And the first, with VinDrive CRM, God, we failed so much because we just had no idea what we were doing, but we learned from it. And then we pivoted into ORA and took our learnings into that, and that's allowed us to be successful, which has been fantastic. But yeah, it's interesting. Where does this go? I think it'll sluggishly continue. It has been. Dude, we were having this conversation 5 years ago. Is Amazon dead?
I'm sure. Yeah.
Yeah.
Oh,
Like,
man.
no,
I'm so guilty of that too.
It's just going to evolve. But here's the thing: people get so here. All right, I'm going to try not to go down this rant too hard. But Amazon sellers love the easiness of it, right? You figure out your little niche, your little levers, and you pull it, and you just keep doing that day in, day out, which is fantastic. But the moment something shifts, people are like, "Oh my God, it's the end of the world." I'm like, no, the market just changed. And by the way, guess what? We all have platform risk. At the end of the day, Amazon can be like, our fees are doubling. You don't have to say in that. You got to understand your risk. This is strategy, like business strategy 101. What's your opportunities? What's your risk? Your risk is Amazon has control over a lot of things, which is fine. But we just got to accept that. Like when fees go up, people freak out. I'm like, why are you freaking out? You're not going to change it. Adapt. Right? Because here's the thing. People are always like, oh, is Amazon primarily wholesale saturated? No, it's easy to get started with Amazon. It's hard to succeed. And people don't understand that. It's very easy to run a 5-figure wholesale business because you got 2 products. That business is, to be frank, weak in the sense of a competition perspective, right? Like it's easy to be like, okay, I'm going to come and buy way more units than you do because I have more cash and like I can get a better deal and I can drive the price down and drown you out. That's just strategy, right? But when you look at the sellers who really do well consistently, they approach it differently. And they're not worried about you. I literally had, when I was doing live sourcing, actually, somebody, was kind of being a troll. They're like, could you give me your list of resellers that you work with? I was like, I know you're joking, but I would give you my list. I was like, because here's why. You're not going to get the accounts just because you have, it's like everybody just like thinks that having a list of contacts is the business. It's not. It's the relationships, right?
It's the same thing with OA too. Yeah, when like a few people have like DM'd me stuff and everything, and like you still have to be able to find. Otherwise, storefront stock would be like an infinitely like scalable thing.
Right.
It's not, 'cause you can't, like, there's sales tax, there's coupon.
Yep.
You can't buy stuff that other people can buy and vice versa and all that.
Yeah. So, and this is why I was saying at the beginning of the call, right? It's completely different. And you got to understand, and it is difficult, but it's worth it, right? Everything you do, no matter what business model it's going to be, and you guys know this now, it is just difficult. Like there's nothing easy about it. But if you want to do it and you stick with it long enough, you're going to be okay. You're going to figure it out, do well. So I love getting those types of questions because I'm like, I could give you my entire business, like laid out SOPs and everything. And unless you're the right person, and you actually want to build this type of business because you're passionate about it, it's going to go nowhere. It's completely different.
Fantastic. All right. One last question for you. Probably should have asked this earlier, but what came first, the software or the Facebook group and the content?
Facebook group and the content.
Okay, cool. Because I was in the same boat where I just mindlessly did stuff for like, or not mindlessly, but made a shitload of content for 2 years and had no idea where it was going. And then it ended up doing better than I could have ever expected with like kind of a non-linear type growth, which is what it sounds like happened for you as well. And you did a lot of stuff for free for a very, very, very long time. And the longer you delay the ask, the bigger the ask can be. And it sounds like it worked out pretty well for you.
Yeah, no, for sure. I'm a big Karma fan. I don't know, man. It was one of those things where when everybody else was asking for tons of money, I was like, why don't we just give it away for free? We know it too. Let's give it away for free. Let's build a business on top of that. Let's be different than everybody else and how they've been here. Let's treat this seriously. And yeah, it enabled us to launch. I mean, day one, we were a profitable company when we launched Aura. That was fantastic. But yeah, it's what we led with, right? So, I mean, I don't care what business you're in. I think you should always be leading with education. You should always be leading with free stuff. And I don't mean like, my 5 ebook checklist kind of thing, but like real true value, right? Because here's the thing, if you can help somebody scale their business and they've given you nothing in return, and you happen to have something that will also provide even more value, but they have to pay for it, like a software your service or something like that, they're going to, because they already feel like they know you and they're like, dude, you've already helped me so much. How could I not? Right. When I'm looking at competition and I know I need this solution, I'm gonna pick yours because you've already given me so much when the others have given me nothing. Right. So it's just, even from a selfish perspective, it makes a ton of sense.
Fantastic. All right. Yeah, that was an amazing episode. Are you like active anywhere? If our followers, obviously, you know, GORA.com, right? VendriveCRM.com, and the blog as well. You guys got to check out the blog because I've read that personally back in the day about wholesale and stuff. And what's the URL on that regard?
Yeah, so blog and podcast are going to be vendrivecrm.com/blog or /podcast if you're on the podcast. It's still, I keep it hosted just in case, you know, I'm not releasing new episodes or anything like that. But GORA.com. So GOAURA.com. That's our primary thing right there. I think that's really where we shine. And that's pretty much it. You know, I'm not super active outside of that. There's, you know, I do a lot of like interviews like this and just kind of geeking out on repricing, operations, automation, scale, you know, wholesale, all that good stuff. But that's pretty much it.
All right, amazing. Well, thank you very much. And yeah, I mean, I'm really like fired up about this. Thanks a lot.
Awesome. Thanks,
Thank
guys.
you.